Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so now that I have done the intro, let's unmute on the Discord side. Okay, so we are currently recording, and now let's go through the markets, what we can expect for next week, news and chart wise. So starting off with the news, it's going to be relatively quiet in the beginning of the week, but as we get towards the middle to the end of the week, we will start getting some information that is important, that will start to move the markets in a pretty decisive direction. Now, watch out for the CPI on April 12th, meaning year over year and month over month. We'll keep our eye on the core numbers that come through, and then obviously we're going to get the crude oil inventories as well. So this is going to be far more important than normal. I mean, it's always important when you're dealing with the crude oil inventories, but now that Saudi Arabia has pretty much decided to cut supply against the wishes of the West, namely the US, these numbers are going to have a lot more weight behind them than normal. So we're going to keep our eye for that. And then we have the FOMC meeting minutes coming out on the 12th. So obviously 2 p.m. Eastern time, US time. This is going to be major news. This is what's going to definitely bring a ton of volatility to the market. So keep your eye out for April 12th as FOMC hits the markets as well. Then the next day, the 13th, we have PPI data and the initial jobless claim. So more important data that's going to start to shape what we can expect going into the into Q2 as we have just begun. And then on the 14th we have retail sales, we have industrial production, and then we have the University of Michigan sentiment. Now these numbers are very important, but what's going to move the markets relatively quickly will be Michigan sentiment. Okay, this does move markets, so keep your eye on that. That will be happening at 10 a.m. Eastern time US, April 14th. So we have a good chunky news week coming, especially as we get towards the middle of it. Okay, now let's get towards the charts, see what's going on. So starting off with the dollar. Now I am, in my opinion, alone on this island and think the dollar is likely going to break up. Okay, if you turn on the news or you look at investment Twitter, crypto Twitter, whatever, any social media, most are very bearish on the dollar. I'm quite the opposite. I'm becoming more and more bullish. The price action is telling me to be on alert for a spike up, going back towards 103.66 and potentially even higher, going back towards 106 to 105. Okay, now I'm not saying it's going to break to the moon, go back towards 110, 109 this coming week, but I am telling you, be on the lookout, because the dollar is trying to change character since the drop that started in 2022 October. We've been breaking down since then. We finally made a low, hitting this monthly bullish fair value gap, popping up, taking out this pivot here, and then breaking down, and now as you can see, it's attempting to make a higher low from this low here. Okay, if this succeeds, then we're looking for a move that will challenge these highs potentially, or at the very least come back towards the top of this blue zone, which is a consolidation zone, which is about 103.5. So I am short-term bullish on the dollar. I'm more leaning towards mid-term bearish on the dollar, and then long-term I am very bullish on the dollar. Okay, so watch for potential strength coming into the dollar, which could bring weakness to the markets. Next is the Dow, S&P, and NASDAQ. So looking at the US indexes, let's take a look at where these guys are trading at currently. So the Dow is currently trading in a bearish fair value gap, which makes sense, especially if the dollar is starting to gain strength, building at a larger bottoming structure. Then this makes sense to be trading in a more bearish zone. So we've grabbed the liquidity above this pivot. We're trading within this fair value gap, really respecting the highs and lows of it. And now if the dollar strengthens, it's a good shot that the Dow will find some weakness, and we may see it come back down towards 32,950 and potentially even lower, going back down towards 32,500. And then we'll see, we'll be able to make a higher low. Will the dollar weaken very quickly and make a higher low for the Dow over here? Or will we actually start to break down some more, coming into these fair value gaps again, grabbing more liquidity, and then eventually making another low to then start the next leg up? Okay, so I am bullish on the Dow, looking at structure wise, but short term, I am looking for some downside. So anywhere from 32,500 and potentially continuation going back down towards 31.5. All right, next is S&P. So let's take a quick look at the S&P, see where that is trading at currently. So S&P is probably going to have a very similar structure to the Dow, and from what I can see here, it is. So did not reach this bearish fair value gap here, but it got very close. Now I may still get that little leg up, that little last reach up to grab that liquidity, but so far it hasn't, and it looks extremely similar to the Dow. So if the Dow does start to break down, look for the S&P to do the same. S&P coming all the way back down towards 4,000. 4,034 and potentially even lower, going sub 4,000 again, back down to 3950, and essentially coming back towards this zone over here, 3950 to 3900. And then we'll have to see, we'll be able to create a a larger ranging structure, or will we just have continuation going after these lows and breaking back down towards the 3800s? Now, in my opinion, if the dollar's getting as strong as I think it will, this will likely break back down to 3900, 3950, and then I would look for it to hold here for now. Okay, unless we start seeing the dollar start getting past like 106, going towards the 107s, the 108s, that's when I would look for sub 3900. Anything before that, I would stay around this zone personally. Next is the Nasdaq. So let's see how the Nasdaq's doing. Obviously overextended compared to the Dow and the S&P. Really came up into this bearish fair value gap. As you can see, it wicked right into it and then was denied, and now it's trading ping-ponging in between that bearish fair value gap and the bullish green consolidation zone. So we finally filled out that zone, came back up, came back down, and started trading on top of it. And now, in my opinion, we're looking very good for a pullback for the Nasdaq, very extended compared to the S&P and the Dow. So look for a pullback to eventually come and take this low out right here, back towards 12,500, and then we'll see if the dollar can actually get weakened out fairly quickly, not getting past 106 or 105. Then we'll probably hold this general zone for a longer period of time, and then maybe even get another leg up coming back towards this bearish fair value gap. If we do see the dollar increasing in strength as it comes towards 106, look for a continued move down going towards 12,250, all the way back down towards 12,100. All right, now let's take a quick look at oil, gold, and silver. Okay, so the commodities. As you can see on the chart here, okay, so before everything loads up, you can see on the chart there's a gap up, right? So there's a gap up. Now that came from the S&P, from Saudi Arabia, essentially putting out the news that they're going to be cutting supply. So that was unexpected, caused a gap up in price, and since then, in my opinion, we've been in bullish consolidation. I am looking for continuation going towards 86 to potentially even all the way back towards the 90s, really coming back towards this fair value gap right here. And this would be the first place I would look for oil to get to and then show major weakness. This would be the first zone. Now we are currently in this fair value gap right here, or just under it right here. So there's another little liquidity zone here we can watch for. We've seen the wicks from here and here coming into this zone, but in my opinion, since we are slowly building out a bullish consolidation, it's very unlikely for this place to hold. This bullish consolidation, if it continues to trade in this direction, watch for it to have enough fuel to break through this liquidity zone and then have a leg up going back towards the 90s. Okay, and then if you've been following my recaps for any time, you know I am extremely bullish on gold, on gold as well, but on oil specifically. And I do think that oil is going to be going to levels much higher than it currently is over the next coming years. So that we're trading down here, I would be looking for any sort of sign of a pullback to then take a long-term position on oil over the next 5 to 10 years, because I do think we'll be trading well above the hundreds, going towards the 200 zone potentially. Okay, so in my opinion, we've bottomed out for potentially a long time. If we do break down from here, it'll be off the news of a massive increase in supply, but that doesn't seem to be on the horizon. This looks like potentially the bottom. Okay, next is gold and silver. So let's see what's going on with gold and silver. Gold breaking past 2,000, having a beastly move. I mean, absolute beastly move on gold. breaking past that 2000 ceiling is a big deal. There's a ton of fear in the markets, but I also do think there's a bit of an overreaction in the response to the dollar. So, we've been slowly seeing the dollar strength kind of waning all over the world, especially in the East, but it's a behemoth of the dollar. Over 60% of the countries in the world hold dollar in reserve because they have debts to pay in dollar. Even if they want to trade outside the dollar, they still have to pay their debts in dollar. So I'm not saying the dollar is not going to disappear or whatever. I do think eventually, give it enough time, you will see the dollar's strength wane even more, and the world reserve currency status will probably be taken away. However, that's not going to happen as fast as some people may want or may be thinking. In my opinion, I do think we have decades going forward as this process happens before we are completely outside of a dollar denominated world. Okay, so currently I do think there's a bit of an overreaction, but I do agree with the sentiment. Okay, people are running towards what they perceive as safety. Gold, in my opinion, is a safety hedge. It is a hedge. However, it is, in my opinion, very overextended. Look for a pullback. Okay, look for a pullback. I am looking for a pullback back under 2000, going back towards the 1980s. We probably will trade there for some time. Now, if the dollar gets very strong, so if we get towards 106 and we start showing signs of breaking towards the 107s, the 108s, then you'll probably see 1980 get lost, and we'll be looking for a move back down towards 1930 to 1900. Now, in my opinion, it's very likely we get back towards 1985 to 1980. Looking for anything lower right now, there's not enough evidence. Okay, the evidence that I see is a pullback back to this level, then a consolidation, and then we'll have to wait and see how the dollar builds. Okay, next is silver. So silver, let's take a quick look. Also overextended, very powerful move, taking out this major consolidation here and finally grabbing into these liquidity zones here. So there's a bunch of fair value gaps here that got filled. Okay, so these fair value gaps are gone, as well as this one. So we are looking now, just like on gold, for a pretty significant pullback onto silver. The first level I would look for silver to get back to is 24 bucks, and then if we get major weakness coming out of the commodities because of major strength coming in to the dollar, then we're going to be looking for silver getting all the way back down towards 23 to 22.8, 22.5-ish. Okay, so we are looking for a pretty big pullback, but the pullbacks on both gold and silver are bullish. You have to keep that in mind. All right, next is Bitcoin. So let's see what Bitcoin's been up to. It's been pretty quiet after after its major rise it's had. It's been, in my opinion, building out a pretty bearish structure for now. Okay, I reserve the right to change my opinion if we continue to trade in this zone, but currently I do find that this is overall pretty bearish. I do find it to be more of a trap for longs for the most part. So I do see this being a bear trap, a bull trap essentially. So I do think that a lot of the bulls that are looking for continuation here, they may get it, but the probabilities are not on their side right now, at the very least. And we are seeing some weakness into it today, but very little volatility here, right? Very little volatility. Now, we may get that move down, or we may continue to hold this structure and trade back towards the 29s or 28.5-ish. But once we start breaking down on this structure, the first level I'm going to be looking for is 26.5, and then eventually back down towards 25,000. Okay, I can see us hold there for sure, but once we get towards there, I do think that we've had a bit, enough of a rejection from this zone here, enough of a pullback to where we could look to build out a bullish base and then have continuation. But I am looking for a pullback to this level, and if we are going to have continuation to the upside, we do want to see a pretty prolonged consolidation around the 25s to maybe even the 24s. That way we don't continuously get this immature, unhealthy reaction in price to where we just barely come down to a level and then immediately shoot up. We want to see prolonged consolidation, kind of like what we're seeing here, but to the bullish side down here. And if we can do that, then we'll start creating a nice base that will eventually lead to, in my opinion, continued upside down, back up towards the 31s, the 32s, and maybe even the mid 30,000s, right? That's what we want to see. Now, if gold is going to weaken out as I'm expecting, we could look at that as Bitcoin will probably follow. Because if you look closely, Bitcoin and gold have been correlating a lot more lately. They've been coming together a lot more lately. So if that continues to happen, that relationship, if gold starts to weaken out, you might see it happen on Bitcoin. Okay, so my first level to watch out for, the most probable level for Bitcoin to get to first, is 26 to 25. And if we do have upside from here or even from down here, the next major level is going to be the 32,000 zone. All right, guys, so that is it for this overview. Hopefully you got something out of it. Again, if you have any questions, make sure to let me know in the comments or join the Discord. If you haven't, you'll find the description. You'll find the link to the Discord in the description. And remember, be patient, be vigilant, and be nimble. Love you guys. Take care.